Hey, how's it going, everyone? So today we're going to be going over my dividend investing portfolio, which we just hit a huge milestone for. You can kind of see it right over here on screen. We hit over $20,000. Now, this came in the span of over 2 years of being focused and dedicated to this portfolio. So we're going to break down some stuff. We're going to look at some of the stocks I have, how they're doing, and how everything has kind of accumulated to this number. Before we do that, though, just want to let you guys know the program that I'm using is called M1 Finance, which is a great platform for any future dividend investor. And right now, while there's still time, they are doing a really cool promotion where you get an extra $30 bonus when you sign up with my link down below and deposit $1,000 when you get started. Now that can be a lot, so if you can't do that amount, no worries. $100 is what's needed to get your account up and running, so go ahead and at least get that started. But if you can do the 1,000, you might as well earn that extra $30 bonus. Now, what we're gonna do is shrink myself up here in just a second, so you guys can kind of see more of the computer screen here. So what we're going to really do here today is kind of just go over, hitting this huge milestone, because for me, this is pretty big. Now, there are YouTube channels out there and other portfolios that are much larger, and that's okay. That's totally fine. And you might be somebody who might be looking at my portfolio and saying, whoa, this is a crazy amount. But I want to really show you this. So there's a thing over here called value over time. And you can see back in January of 2019, I started off with $100 in this account. So don't think you can't get to this number if you don't have it available day one. That's totally okay. That's where I was as well 2 years ago. So put in what you can and get started. And you can just see here over time, as I started learning and growing, you can just see that my account started going up in value. Now, of course, as I understood where I wanted my portfolio to go and how I wanted it to look like, I started investing a lot more every single week, every single month, whatever I could, until now to the point where I'm putting in a healthy amount every single month. Now, understand that can't be for everybody, but what really is important is staying consistent with investing, because if you try it for a week and you don't understand it and you don't like it, you might not continue long term. So, you're learning every day, you're keeping on that progress of, investing every single time you can. Ideally, if you can do it at least every 2 weeks when you're getting paid, even $5, $10 can go a long way. So what we're going to do is take a look here. So let me close this off here. So in the last day, the portfolio hasn't done very well as of this recording, but we can go over here to the week. This right over here, we were up almost $325, which is great. For the last month, we're up almost $767. And then for the quarter, we're up pretty much $1,900, which is fantastic. And then over the last year, $3,700 pretty much is what we are up. So that's fantastic. That right there, of course, is what they call money weighted return. So if I earn dividends and or sold any stocks for a profit, that money is still showing on that end. So for anybody that's curious about unrealized gains, this is where we are currently with unrealized gains. We're at $3,162, which is about 18.5%, which is pretty great. Obviously, there are some people out there earning some crazy amounts of money with, some riskier stocks. And what I have to say to that is that's awesome. Really happy for those people that are making that money, but it is too much risk for me, and I do have long-term plans and goals with this portfolio, so that's just not what I'm doing on this account. Now, I do have other accounts where I am a little bit riskier, but that is a much smaller portion of this total that you see over here, which is this $20,269. Now, in case you're curious, one of the big goals here for my channel and this portfolio is to earn some extra passive income. Now, I do that by earning dividend income. And in order for me to earn that dividend income, I need to be very consistent, and I need to be paying attention to what my ultimate goals are with all the stocks I have in this portfolio. Now, I do have some growth stocks in here. So for anybody that's curious, I do have, and I'll show you here, this slice over here called growth. So I'll go in here for a second just so you guys can see. So right now I have Tesla, Amazon, Google, and Facebook, making sure they're on screen. So all of these companies I currently have available here for me to grow on my portfolio, not just on the dividend side of things. So I am focusing a little bit on that side and not just dividends, but the ultimate goal for this portfolio is to earn that passive income, ideally anywhere from 10 to 15, even higher every single month in dividends. Yes, I said every single month. So Not every year, not every, quarter, but every month. That is the goal. Now that's going to take a lot of work, a lot of dedication, paying attention. But the reason I want that is in 15 to 20 years, I want to be able to use this money to be able to go travel, to be able to do other things with, where I don't need to have to worry about an income coming in on a regular basis from regular work. So, of course, you saw there, we got some of those growth stocks. But in order to do the thing that I'm doing is I'm focusing in on dividend growth. Now, a lot of people just talk about dividends in general, but I like to pay attention to the growth side of things because growth can really have a huge impact on the dividends that you're earning. And by dividend growth, I mean when companies are paying you one dividend for a allotted amount of time, and then they increase them as well. So I hopped over here on seekingalpha.com, and I'm going to go to Home Depot as a quick example. So Home Depot, if I go to their dividend tab here, has what they call their 5-year dividend growth rate at 20.52%. So that means that on average, over the last 5 years, you've essentially got 20% increase in your dividend payouts every single year, which is fantastic, right? So what I like to do here, let me close that off, is go to the dividend news so you guys can see this. And some of you might already know this, but that's great when you keep hearing it over again because it's going to really stick with you. But we can see here that in February of 2020, Home Depot increased their dividend from $1.36 to $1.50, which is a 10% increase, which is great. That's a huge increase, especially when you start having multiple shares of a company or hundreds of shares of a company. That 14 cents right there can equate to a lot of money. And they're poised, because right now, at the time of this recording, within the next month to actually do hopefully another dividend increase. And if it's anywhere around this, 10%, that is going to be a healthy amount of increase, as well as making more money on my money, which is great. That's what everybody's goal is, right? Especially when it comes to dividends. So if I actually go to my research tab here and I go to my pies, I want to show you guys something real quick. I don't show this often on the videos, but right over here, you can see currently because of the yield, I cut that off. Currently because of the way my portfolio is balanced. So my dividend yield is saying that it's 1.722%. And that might seem very low for somebody who cares about dividends, right? Because if you care about dividends, you typically hear 3.5% to 4% yields is what you want. But because I'm playing the long-term game, I don't really need those high number dividends right now. What I care about is dividend growth over time, as well as the value of the stock going up over time. So with Home Depot, if we go back here and let me go back to the scorecard. So you can see here their dividend yield is only 2.23%, which is nowhere close to where a lot of dividend investors like to be. But again, because we're long term, we got 10, 20% increases every single year. I'm going to get to that 3.5%, 4% yield really, really quickly. And that's called yield on cost. So if you've never heard of that before, that's essentially, I'm going to show you right over here. So this is a graph over the last 5 years with Home Depot. Kind of works from left to right. So it starts right over here, current time, all the way to 5 years ago. And the reason this graph is going up is because if you are buying into Home Depot right now, like you saw earlier, our dividend yield is around that 2.21% or so, give or take. But let's say you bought 5 years ago, let's say you bought like 100 shares and you did nothing else with Home Depot. You didn't buy more, you didn't sell more, you just earned the dividends and that's it. So exactly 5 years ago, give or take, kind of goes up and down a little bit, of course. But like 5 years ago, if you had bought into Home Depot, you would have been paying $119 per share. And now your dividend yield is over 5% in just 5 years because of how much they're increasing their yield year after year. And I promise you, when in 5 years time back then, that percentage in yield was not 5%. It was probably closer to 1 to 2.5% like it is today, but it's just grown over time just because of the fact that that yield is going up. So for me, this is what I love, right? So I'm hoping that buying in now, which I've been into Home Depot for I think over a year now, if I'm not mistaken. So a year ago when I was buying into Home Depot, obviously before like the crash in early 2020, I was getting a yield, I think it was around 2% is the original yield, but because of that one increase that had happened, my yield on cost is around 2.82%. So it's already higher than what you see on the main screen there with Home Depot, but it's going to continue to go up as they increase their dividend. So if in February they increase another 10%, my yield on cost goes up because all of a sudden I'm getting paid out more for having bought nothing more than what I already own of Home Depot. Now, of course, if I buy more into Home Depot, which I do on a regular basis, then that yield kind of fluctuates a little bit more. But nonetheless, the money that's always been in there, as it keeps getting dividend increases, keeps becoming more valuable, which is what I love. So right over here, this 20,000, a lot of that has to do with long-term goals of, like I said, what I want to do. So when you look on here, the biggest section over here for me is my tech pie. So with my tech over here, you're going to see that Apple and Microsoft are my biggest positions. We do have a little bit of AT&T, but I am holding off on kind of either deciding if I want to hold it longer or if I just want to end up selling it over time. But for now, I'm earning a pretty healthy dividend every single quarter from them, and I'm using that money to reinvest into other things as well. So we got those guys right over there. And so that's my biggest position. So I'm going to go into my holdings tab over here. So you're going to be able to see all 28 positions that I hold, one of which being a ETF. So just keep that in mind, making sure everything's on the screen there for you. And then these are going to be all the companies. I'm not going to go over them individually here today, just because it can take a little while and I don't want to kind of cut it off too much. And then the one down here at the very bottom, it is just slightly covered up. That is Pfizer. At the very, very bottom, but you can see everything else that I have in this portfolio. So the reason I like to kind of just showcase it is the biggest thing when it came to putting this portfolio together, and I'm going to actually go into the big screen here. So the biggest thing when it came to putting this portfolio together is the fact that this is not what it looked like when I started off with that $100. Remember, I showed you I started with $100. That's not what this portfolio looked like. All I actually had was Microsoft, Tesla, and Vanguard ETF. That's all I had in my portfolio. And over time, I added and took away different stocks because either I didn't like them anymore or it started getting overwhelming with 44 different companies that I had. So I cut it down to 28 because I felt like that was more manageable for me to pay attention to the companies, understand what's going on, making sure if something happens to one, I can be more attentive to it, whether I want to keep it or, sell it off, whatever the case may be. So let me go ahead and zoom back down here. So one of the things I want to do just to kind of show you, obviously, if I go to unrealized gains, Tesla is number one here. I don't own that many shares. It's 2 shares after the split and everything that happened last year. But still over $1,000 in gains. That is fantastic. But like I said, it's not my main goal because I do have dividends that I want to be focused on. But this is obviously a company I do believe in for long term, as their PE ratio just skyrockets day in and day out. I put in less every single time just because it's starting to become a little too much for me. But you can see I have other companies like Discover and Ally. Both of them have some really great returns. If only I knew better, obviously I would have tossed in more money with these companies, but I did what I could there. We got Ross, Starbucks, and Hasbro also doing some really great returns. But here's something I want to show you as well, because most people do not show you the bad stuff in their portfolios, right? So right now I have 3 stocks, AT&T, DLR, and then Lockheed Martin, all currently underperforming in this portfolio all across the board. Now, AT&T is a little different because they are paying a healthy dividend, so I'm kind of almost broken even if I sold today with AT&T, if you account for the dividends I've earned while holding this portfolio or while holding this stock. A little bit with DLR and Lockheed Martin, but definitely nowhere as much as I've already been in the negative with them. But here's something that I want to let people know. What I personally like to do is when a stock is down in my portfolio, but I believe in them long term, or I am planning on holding them long term, when they go unrealized like this, where they're in the negative pretty heavily, I start buying a lot more into them. And I'm going to show you here exactly what I mean, because when you are looking at this and you're saying, oh man, they're down, like, the value of them is negative from what I actually purchased. Like if I sold Lockheed Martin today, I'd actually have lost money, but I don't plan on selling them because I believe long term they're going to do well. So what I do is go into the activities here, and you'll see here. So this last purchase here, you can see DLR, I put in $25. That's not a lot, obviously, but working with what I have, I do about $250 every single week at this point, which I was slowly, gradually going up in how much I was putting every week. So I put $25 into there, and then you could see Lockheed Martin, I put in $35 in there. Now, I do have a little bit more that went into Apple than everything else, but that's just how my M1 Finance portfolio account worked. But I manually put in more into those two stocks that were going down because I wanted to be able to buy them at a cheaper price point, lowering my dollar cost average. And in case you don't know what that means, I'll show you this right over here. So if we go into my industries tab here, and we'll look at Lockheed Martin. So Lockheed Martin, I'm down. Obviously we talked about that. So you can see here, my average share price is $364, and the current price in the market is $337. So there's a significant difference in how much I've on average paid for versus what it is in the market right now. So anytime I buy more into Lockheed Martin at this price point, or anything essentially below the 364, my average is going to go down, which means that once the stock goes back up, it's going to, hopefully give me even better returns because I'm buying at a lower price point. So when I see companies like this in my portfolio that I believe in long term, that's what I do. I just buy a lot more into them because it gives me more value. And then I try to slow down on the companies that are hitting their 52-week highs because they generally will peak at their 52-week, kind of dip a little bit, and then hopefully go back up afterwards. But that's kind of like the method I use. So that way I get more value in these long-term goals of having, dividends to pay out down the road and being able to grow them as well too. If you don't follow along already, make sure you hit that subscribe button, by the way, because I do like to share on a weekly basis how this portfolio is doing. So we'll go into what I call my dividend spreadsheet. Let me see here if I can. Oh, there we go. So I moved out my screen there. So this is my dividend spreadsheet right over here. This is what I like to share with you guys on pretty much every single video to show you how much I've earned in dividends across the board. Now this is free for you if you want to go ahead and sign up with the link down below. I just give this to you guys. I put this together. I just like keeping track of everything. Right now, for beginning of 2021, let me go ahead and zoom back in a little bit. You can see here, I've earned $5.18 in dividends thus far. And the cool thing about that, obviously I'm still having a lot more of the month to go with a couple different companies to pay out, but I've already I made well more, I can't even speak, guys. I'm like way all over the place here. I have made quite a bit more already just in the early parts of 2021 in January than I made of all of January 2020. So you can see here, I made $2.39 in 2020, and I made $5.18 already in this month alone when I still have a lot of other companies to pay out. So I'm excited to see how much I'm going to be making this month in comparison to 2020. And then you can see here, I'm going to compare all of 2021 to what we did, all those times in 2020. I mean, 2019 is hard to compare because I was just getting the portfolio started, so there's not a lot building up. But seeing 2021 versus 2020 is going to be a really nice thing, just because there's going to be so much opportunity there for me to continue to grow this portfolio. Because as I grow the portfolio, of course, then the more dividends I earn, the more compounding happens, because compounding is a big deal when it comes to earning dividends. And it's kind of cut off here, but you can see that I've earned pretty much paid out on M1 Finance almost $200 in dividends, which then I can turn around and reinvest in the portfolio, which is essentially what I do. So I'm really excited to kind of keep showing you all of this stuff here on M1 Finance and my dividend investing portfolio, as well as my Vanguard, because I do also have my Vanguard portfolio. Let me switch this back over. I do also have a Vanguard retirement portfolio that I like to share with you guys as well. So you can check those out here on the channel. Like I said, if you're interested in M1 Finance, make sure you sign up with the link down below before the promotion expires, but it does help out the channel when you guys utilize my links in the description boxes below. So check out this next video right over here to keep on learning and growing with your investments. My name is Dennis, and I will see you in that next video.